Do you have student debt, or did you pay it off already? And do you think your degree was worth it in terms of how much you paid for it versus what you're getting back? College costs are still rising, and many people are starting to think that it's not worth it anymore. Let's see if you and I can't determine the true return on investment when it comes to a college degree and see if the alternatives might be better. Welcome back, everyone. My name is Zach, the Money Nutritionist, and this is Season 2 of True Freedom, Episode 3. I'm calling Season 2 Unseen Forces because we're discussing the movement of money and how it functions on things that aren't seen by the natural eye or the average person. If you don't mind taking a second to subscribe and smash that like button, it really helps me because it takes tons of time to do the research, edit the video, shoot the video, make sure this information's correct. So it goes a long way when you crush that like button. With that said, let's go ahead and jump into the episode.
We're going streaking! Come on, everybody, we're going! Here we go!
Anyone who knows me knows that I'm a numbers guy. And it's because numbers can give you a definitive answer on something difficult that's happening. Numbers will paint you a picture and help you to make the right decisions. As the money nutritionist, I'm all about making the healthiest money decisions possible. Yes, there is a difference between a healthy and non-healthy money decision. For instance, it feels good to day trade, but it's not that healthy. Whereas long-term investing and not touching your money in the stock market is much healthier. If you think of college as an investment, we have to decide if the return on that investment makes sense. So is the money that we're shelling out for college worth it in terms of what we're getting back? We need to decide if the return on investment, or ROI, is healthy or not. The good thing is that ROI is pretty easy to calculate. You're just dividing the benefit by the cost. So if you make $50,000 your first year out of college and your student loan is $100,000, then that return on investment would be 50% and it would take you 2 years to pay back your loan. However, let's do the real math. You're going to get taxed on the 50% and you'll be paying interest on your loan. In North Carolina, that $50K is actually $39,000 after taxes, and the average student debt interest rate for all households is 5.8%. This turns your 20-year student loan into $170,000. So the real return on investment if you make $50,000 out of college and have $100,000 in debt is 23%. This return is still amazing, and it's better than all of the alternatives. The problem is that once you get out of college and start making payments, those payments take away basically all of your money. And that's why people are pissed off, because you don't have money for anything else because you're too busy paying your student loan. So let's see if we can't solve this Rubik's Cube of a question on the ROI of a college degree. And I know many of you are probably yelling at your screen right now saying, "But doesn't the degree type matter? Doesn't it matter how much your parents make? Well, what are the alternatives? What if I want to get a master's degree?" Well, just hold on a second. Quantifying some skills in college can be very difficult, like keg stands, for instance. I'm not sure how to quantify that, but I can quantify beer pong skills. You'll also learn how to focus and that losing is okay because you can always bounce back. Ha ha ha, that was punny. You think I'm joking, but intangibles like social skills, independence, time management, learning, working in teams, those things can't be quantified, but they're extremely important when it comes to a college degree. Now, when it does come to numbers, some schools are proven to have a higher return on investment than others. For example, the career website PayScale has determined that there's a difference between some degrees and some schools. For their study, they took into account on-campus housing and no financial aid. The United States Merchant Marine Academy's Service Academy, they had the best ROI at 19%, with the total cost of 4 years coming in at $34,900. They were followed by SUNY Maritime College's in-state program at 13%, and Brigham Young University, Idaho at 12.6%. Tuition at SUNY was $95,300 and $48,200 over 4 years at BYU, Idaho. What surprised me the most is that top Ivy League schools like Harvard and Yale actually didn't perform that well in terms of return on investment because they're so expensive. Overall, the median annualized ROI is 6% for public schools and 4% for private schools. Keep in mind, though, that this study was over 4 years of on-campus living and no financial aid. And we know that when it comes to public and private schools pay out way more money in scholarships. So when you take into account scholarships and potentially living off campus, those numbers may be closer than 4 and 6%, with private schools, in my opinion, probably coming out a little ahead. To be clear, ROI is how much you get back based on how much you paid for your degree. So if you paid $100,000 for your degree and your return on investment, or ROI, is 10%, that means you're making back 10% each year, and it will take you 10 years to recoup all of that money that you paid for college. But what degrees are best? An art degree is very different from an engineering degree. Take BYU as an example. They have the best ROI for a humanities degree at 9.9% ROI, but a business degree will get you a 13.7% return, engineering a 14.2% return, and computer science or math at 14.7% return. Obviously, the school and degree will vary, so when it comes to ROI, it has been shown that the STEM degrees will give you the best return on investment, and that's your science, technology, engineering, and math degrees. Those are going to net you the best return on average. So what we've learned so far in terms of averages is that a good school and a good degree will have a positive return on investment. And as you keep working and you get raises, you get bonuses, and you get promotions, that return on investment's only going to get better. Overall, the return is still better than the alternative investments like stocks, CDs, bonds, and other securities. It's also been proven that a college degree will give you a much better return over your lifetime than just having a high school degree. But again, many people will say, what about Mark Zuckerberg? What about Bill Gates? What about Steve Jobs? They all dropped out of college. And you're right. They dropped out of college and became billionaires. Maybe you're the next Elon Musk. I don't know. But researchers Jonathan Way and Heiner Rinderman found that 94% of US leaders, including top journalists, politicians, and CEOs, attended college, with Harvard, Stanford, and the University of Pennsylvania cranking out 324 combined billionaire alums. I know where my kids are about to go to school. Hey son, here's 3 schools you have to go to. You have no choice. Undoubtedly, when it comes to college, a lot will come down to the resources you have. Grades, connections, networking, and things of that nature that, again, you can't quantify it. I want you to know that I understand this point completely. We can't forget the recent court cases involving rich and famous parents who bribed their children into elite universities. When we step back and ask the simple question, is there a positive return on investment to a college degree? The unequivocal answer is yes. You will get your money back and more. This is why I always consider student debt good debt, because you're going to earn your money back even though you're paying interest on the loan. But it's up to each individual person to choose a degree that makes sense and will give you a positive return on investment. And once you start working, it's up to you to have the work ethic to make that return on investment even better. Do I agree college is too expensive? Of course. Another huge alternative is that you can start investing for your kids now. You've got the 529 plan and a traditional IRA where you can help your kids by saving for their education now. According to collegedata.com, the average price of tuition and fees for private colleges was $36,880. Then it was $10,440 for public college in-state tuition and $26,820 a year for out-of-state residents. Now, when we start looking into the future and start looking at numbers and quantifying what's already happened, my answer will start to change a little bit. The numbers start to get a little scary. According to the College Board's trends in college pricing, it's predicted that a year of public college will cost between $35,000 and $108,000. The range is the difference between 3% inflation and 10% inflation. Can you imagine paying $400,000 for an undergraduate degree? At that point, I might honestly say that a college degree may not be worth it, unless wages rise. Right now in 2020, during the pandemic, we are supposed to be experiencing 8% inflation. So if this continues, we can expect college costs to get close to this number. But what about private school costs? It's estimated by 2035, per year costs at a private school will run between $80,000 and $245,000. So yes, it's possible that when our kids go to college in 2035, they will have student debt worth $1 million. If you pay $1 million for an undergraduate degree at 18 years old, you're never getting out of debt. If your kids want a master's degree, doctorate degree, go to med school, become a lawyer, they're gonna be in debt literally forever, and they'll pass that debt on to their children. What these numbers tell me is that it can't continue. It has to change. Those numbers just aren't possible, and I can't conceive that the government would allow 18-year-old kids to be taking out $500,000 loans. And most importantly, we shouldn't even be thinking about letting that happen. If it does happen, I predict that my generation will be the first generation to tell their kids that you do not need a college degree. And if that's the case, that means there's going to be huge demand driven towards skill-based jobs like carpentry, HVAC services, general contracting, becoming a mechanic, services people really need skilled technicians for. We would also see a huge wave of online entrepreneurs. You definitely don't need a degree for many of the jobs you can do online. And if you look at what's going on right now, freelancing is exploding. And if you look at Gen Z, a lot of them want to just become social media influencers anyway. Who would have thought that would ever be a real job? My conclusion is thus. Right now, a college degree is a positive return on investment. It makes you more appealing to employers and gives you skills that cannot be quantified. You will have a lot of your monthly cash flow taken from you for years until you pay back your loan, but your life will be better than the alternatives. This is my conclusion for 2020. And of course, if the cost of college continues to go up to be these absurd amounts, that conclusion is going to change. Wages will have to keep pace with student loan amounts, rising inflation, rising taxes. The money we make based on our degrees will have to increase. And if college gets more and more expensive, then that means there will be particular degrees that could start to have a negative return on investment. That also means if there can be degrees with negative return on investment, there can be colleges with a negative return on investment as well. This could also lead to a ton of schools starting to close. In my opinion, universities will have to change over the next 10 years. And if they don't, we are on a terrible course if you look at the numbers. Until things change, a college degree is a necessary and wonderful thing to have because it can alter your life. I recommend keeping an eye on college costs and helping your kids to start saving now. Thanks for watching. Be sure to follow me on Twitter, Instagram, and Facebook to stay updated on the latest. But more importantly, to stay updated on YouTube, press the subscribe button below.